What's up, everyone? All right, so I am on the road on my traveling trading station, and this is what it's going to be like for the next few weeks. All right, so summer is here, but that's not going to stop me from showing up every single day and from trying to extract as much profit as I can from the market. Volatility is the name of the game, and right now we are continuing to see some huge moves. So this morning, I'm sitting up over $70,000, $70,122.86. We'll pull up the screen share. There it is. You could see. So I'm going to go over the stocks I traded today. Now I've got a couple trades on Bank of America and Ford. I only traded those for the purpose of just demonstrating my hotkeys earlier this morning. So those weren't actual like trying to make money trades. But the stock that I ended up making the most on was KWE. I'm pretty sure I mentioned this stock yesterday when I gave you my game plan and watch list for today. KWE was strong on Wednesday. And then after hours, it kind of popped back up here. And one of the things I said in general yesterday about today was that it wouldn't surprise me if we didn't have a lot of breaking news, right? It's Friday after a holiday. Companies are not probably going to be super inclined to be putting out any big headlines today. So I thought with an absence of any fresh headlines, the focus today might be continuation, technical breakouts, or just stocks with no news. And we got a little bit of both, actually. So KWE was a continuation setup. So we had this consolidation here from after hours and then into pre-market. And then boom, we got that breakout right there, which came right at about 9 a.m. And this gave us a squeeze all the way back through Wednesday's high right there. So when we broke that level, I started to wonder if we were going to see a bigger move on this from possible short covering. That did not end up happening. It could have, but it just didn't. So that was one that we got a nice move on. Then we also had a no news trade on NCTL. This one was a pop and a drop, reversed, but made a little bit of money on that. And then we had AIFF, which popped up, that pulled back sort of predictably. There's a reason that it stopped right here. I'll explain that in just a moment. And then JFBR is a stock kind of known for being a bit more difficult to trade, JFBR. So that one, not surprisingly, popped up in reverse and I actually lost a little bit of money on it, $600. And in fact, I actually gave back profit off the top. I peaked today at $85,000, and I gave back $15,000 off the top on KWE. Or was it? No, it was WHLR. Anyways, let's go back to the beginning of the day. Okay, so sat down this morning, looked at the scans around 6:30 and saw WHLR, and I was like, ugh, Wheeler Real Estate Investment Trust. We meet again. So I've traded this stock before. It's a REIT, a real estate investment trust. These don't usually do that much, but this is one that has had look at how often they do splits. 1, 2, 3, 4, 5, 6, 7. You shouldn't be allowed to do that. 8. And that's just in the last 2 years. That's unbelievable. I mean, this is really ridiculous. So what happens is the company does a reverse split. The price goes up above $1. Then they do an offering, the stock drops, then they do another split above $1, and then an offering, split offering, back and forth, and the price just keeps going lower and lower. So it's a stock that at this point is kind of notorious for their splits. However, it's got such a low float that what we know is that sometimes these stocks can bounce off the lows. And that's kind of what happened today. So when I first sat down, or was not even sitting down, I was laying down, but I pulled up my scanners on my phone and I saw WHLR. I just thought, all right, well, what's the catalyst, right? What's the reason that it's moving higher? And unfortunately on this one, it's just not trustworthy. So I didn't notice it on Wednesday that it had popped up after hours. But it popped up again pre-market this morning, sold off, bounced up, sold off more, bounced up here, sold off, bounced up. So this one, my first trade on it was at 7 a.m. So right at 7 a.m. So that's going to be right here. And I got in here trying to anticipate a breakthrough volume weighted average price. I got in 4,020 shares. That's a pretty funny position. 4,020. Why? Well, I got 4,000 shares filled of one order, and I filled only 20,000 shares of my next order. Only 20,000 shares. Only 20 shares of the 4,000 share order. And so I had 4,020 shares, and it went without me. And so I ended up getting in at about 776 here. I was looking for the squeeze through VWAP and got out as it popped up there to 8, but only for a small winner. So I made a couple $100 on it, but nothing that exciting. I had a small position, and then it didn't end up holding VWAP right here. It dropped back down. So that was kind of a bummer. But whatever, that was my first trade of the day. So on the one hand, I broke the ice. Yes, it was going to be a smaller position anyways, but it was even smaller because I didn't get filled. So very small winner. So then the next trade was JFBR at 7:30. So, and it was actually 7:24. So first trade, 7 a.m., WHLR, didn't really work. So then I'm sitting up only a couple $100 until JFBR hits the scanner. It hits the scanner, and I'm like, guys, FYI, this stock is notorious for being really not very good. It's also done a series of reverse splits. It's sold off dramatically. However, a bounce off the low, maybe that was the idea. So it initially pops up, it dips down, and I get in, first candle to make a new high, pops, rejects, and I go red. Comes back up, dips down, comes back up. I try to get back in here, and I lose on it a second time, and I was like, all right, that's lame. Down $641.72. Again, this is why we trade with small size, to kind of break the ice and get comfortable. So at this point, I've broken the ice and I'm not liking what I'm seeing. So I'm staying with small size. So a few trades on JFBR, and then all of a sudden we get AIFF. Now AIFF pops up. It's a biosciences company, biotech neurosciences company, US company. I've traded it before. We've had some decent moves on it. I guess looking back at the most recent move, it was a red day, as is today. But nonetheless, in the past, it's given some nice big moves. You can see back here in February. And I guess that was more in my recollection than the bad day. So it pops up. And as soon as it starts popping up, I was looking at the chart. And so this is where someone was asking me, Ross, how are you getting in these so quickly? So if something hits my scanner, like here, hits the scanner, pulls back, pops up, hits the scanner again, dips down, pops up, hits the scanner again. It dipped down right here, and I bought this dip for this pop up here. And so basically, a stock hits my scanner, I can click on it, and it'll update the chart. So that's usually what I end up doing. I click on the name, updates the charts. That's because my charts are linked with the color to the scanner. And then I come over to my level 2 window, and I type in AIFF, and then just like that, I can press Shift 1 and I'm in a position. So, it's that quick. Bank, just like that, I'm in. Do you see how all of a sudden I'm in Bank of America? Do you see how fast that was? Lightning. That was my nickname in college. I'm just kidding. So really, for me, Apple, Ford, Bank of America, Tesla. Sometimes I'll typo a ticker. But I'm usually pretty quick. And so, I see something hit the scanner, I type it up, Shift 1, and just like that, I'm already in Ford, right? So that's how fast I can jump in or, jump out of this type of, of really any stock. So it is, I will say, one extra layer that I have to go from clicking it here to my level 2 window. However, this is the way trading has been for me for forever. I guess early on in my career when I was using full service brokers, they kind of had everything in one. But then pretty early on, I went to discount brokers because the commissions were like $2 a trade instead of, $7 or $8 a trade, which is what you used to pay at E-Trade and Fidelity and Ameritrade and stuff like that. So when you use discount brokers, you always sort of had to use third-party platforms for charting and scanning and stuff like that. And so I'm used to it. But anyway, so that's my workflow. Stock hits my scanner like IFF, boom, jump in it. So got in this in the 380s, jumped in, squeezes up to 390, up to 4, up to 412. And then it stopped. Why did it stop there? The 200 EMA. 200 moving average right up here around 4. Now, one of the problems is that I sometimes turn off my 200 EMA. And the reason I turn it off is because if we look at a stock like WHLR, Investment Trust, I have to zoom in a good bit. But look what happens when I turn on my 200. The chart compresses. The problem with the 200 exponential moving average is that it doesn't really play nicely when you have stocks that have had a ton of reverse splits, because the average is just so ridiculously high, you can't read the chart. So you have to take it off. So if you're going back and forth between kind of junky stocks like JFBR or WHLR Investment Trust, and you've got the 200 turned off so you can actually see what you're looking at, then you switch to AIFF, you jump in real quick, but you don't have the 200 on. Now this one, the 200's right there. So that was a little bit of a mistake. I didn't see the 200 when I took my trade. I didn't realize how close. I had no idea. I didn't check it. I jumped in without checking it. So that wasn't great. But look, it happens. And anyway, so that ended up being a small winner, which is okay, $2,500. So that gave me a little more profit. And I think at the time I was red like $300, but wasn't sweating it. So went from red to green on that. And then after that, NCTL hits the scans. NTCL, sorry. So NTCL hits the scans. And first thing I see is Chinese stock, and it's squeezing up pretty quickly right now. So when I saw it squeezing up, I just sort of thought, all right, I don't know if it has news or not, but even if it has no news, these Chinese stocks can make big moves. So it pops up right here to 240. It dips down right there, and I jumped in on that micro pullback right there. 2,000 share starter position, 228, filled only 1,300 shares, and then it starts going without me. Added at 248, filled only 700 shares of a 2,000 share order, and then next thing you know, it's at 350, and goes up to 4. So I got partial fills trying to add to it, and ended up getting the squeeze up to 410. It then dips down. I was up about 8,300 on it, which is where I sit right now. And then right here, I was watching for a dip, and then all of a sudden it drops all the way back to 3. So I was like, yikes, that's not great. Then it bounces, and that I would say is I'm going to grab a screenshot of this. And the reason is it's a pretty classic bear flag right there. So I'm just going to grab a screenshot. This is something someone was asking me how I spend my afternoons. Why don't I just spend my afternoons trading more? And one of the things that I know from my metrics is that I don't actually tend to make more money the longer I trade. I actually have diminishing returns to the point of losing money. But I have a strong sense of wanting to feel productive. And so I end up spending a good amount of time organizing and working on my classes for members at Warrior Trading, and then teaching classes that I end up uploading to YouTube. And I do get a lot of satisfaction out of that. I enjoy doing it. It makes me feel productive. I feel like I'm helping other people. And so anyways, and I get to kind of still be somewhat I'm not actively trading, but I still kind of get to have a sense of what's happening in the afternoons. So bear flag right here. So anyway, so the bear flags on this were right here. That was the resolution of the downside, and then another one right in here. So it popped up, gave us a quick move, but it wasn't able to sustain that those gains, which is disappointing, but not totally shocking. So after that, I'm up 10,000 on the day, and I was like, all right, that's not bad. I can feel pretty good about that. It's Friday. We're going into the weekend. I already had pretty low expectations for today. I'm traveling this weekend, and I'm kind of like, the last thing I want to do is take a big loss and then sit on a plane for 8 hours and be thinking about that loss. I've done that before, and I did not want to do that here today and going into the weekend. So I said, you know what? Let's just take it easy. So anyways, got my cushion there. Now I'm up 10,000 on the day. That's 845. And I'm like, all right, that's probably it. So then I took my trade on Ford and Bank of America. I was talking about hotkeys and how I'm getting in and out. Then all of a sudden, 9 a.m., KWE. So 9 a.m. KWE pops up on the scanner, and this is a stock, like I said, that was already on my side chart. I had it on side chart. I had looked at it a couple times earlier in the morning. I said, $12. This is a pivot. So that's kind of the level to watch. We break 12. Where's the next resistance? Well, kind of looking up to the high of this level here, which is 1450, and then up to 1537. And so what ends up happening on this is it pops up pretty quickly right off of this sort of top of the hour. It was just sort of creeping a little bit higher here, and then all of a sudden there it goes up to 12. Then it squeezes right here and goes up to 13. Micro pullback right there at 1350, and it squeezes up to 16. So do you remember yesterday when I was talking about micro pullbacks? That was a micro pullback right there. That was a really nice micro pullback, a momentary dip right under the whole dollar, and then squeezing from right there about 14. So my average was like 1397, and it goes all the way up to a high of 1660. And of course, I had sort of optimistic hopes that it was going to go higher. That did not end up happening. I held that whole position up $2.50 a share, and I didn't sell. I was like, this thing, let's see what this does. This could be our one wild card Friday move. And so I ended up selling as it came back down a little bit, but still locked up $36,000 on it, which is fantastic. So a 2.5 point move, well, it was actually more like a 5-point move from 11 all the way up to 16. But in any case, from that micro pullback around 14 up to a high of 1650, 2.5 points, that's pretty solid. So got a really nice trade there on KWE. That put me up 46,000 on the day. And then WHLR was still on my side chart. So, have a couple side charts up watching it. And all of a sudden, I see it creeping up towards the volume weighted average price right here. And as it breaks VWAP right there, I jump in it. I say, you know what? Let's see what this thing can do. So I jumped in for the break of VWAP right there. It ends up going from, it was like $8 basically, straight up to $9. Hits a high of $9.20. Now, what I ended up doing was adding, so I had this big position right here. It hits a high of 920, and then I add to it right here for the squeeze over 9. First 1 minute candle to make a new high, and it doesn't break, and I have to sell, and I get out here and then sell the rest here. But I did end up selling enough of it here that I had a pretty good profit, but I was up about 38,000 on WHLR. It was the biggest winner of the day, and then I gave back 15,000 because I added back right here and then got stopped out. So peaked at 85,000, and then gave back 15,000 off the top, and then that was it. And I said, all right, I got to run. So I'm going to, close it up here, and I'll do my recap later, from the hotel, which is what I'm doing right now. And, I'll live to trade another day. So, that's it for me. That's kind of the way the cookie crumbled for today. I was hoping, I don't know. I think I'm eternally optimistic whenever I sit down, especially when we're in a hot market. I just look at some of these setups and I'm like, man, if this thing works, where's the next resistance level? And the fact is, we've had a number of stocks over the last, week or so that have put in huge moves. Go back to REBN, which was the $200,000 day, earlier in the week. This went from $4 to 14, pulls back, then goes up to 20. There's no question there are traders out there who made hundreds of thousands, probably millions of dollars on this. It was incredible. And so the thing for me with trading is that I always, even today, I'm thinking, today was good. I could have done better. I could have not given back 15,000 off the top. I could have maybe sold KWE when I was up 2.5 points instead of holding. And then, when I'm in my next big trade and I'm thinking about adding, I'm probably still going to add. I'm going to double the position, and I'm going to be thinking, well, if this thing goes, all of a sudden, like RBNE, for instance, this was a blue sky setup over 2025 right up here. So to me, I was looking at this and I was like, if this thing keeps going, 38.40, I don't know, could that happen? Maybe. And then next thing you know, it's just, a really big trade. So, if you've been tuning in for a long time, you know that I've spent quite a lot of time talking about base hit trading. And I learned to trade during a colder market. I mean, 2010 through 2019, before the pandemic, that whole decade was relatively cold. In fact, 2000 to 2010 wasn't really a lot better. I mean, my experience in that decade was sort of more of I first funded my original TD account in 2001. So I was sort of dabbling. I wasn't actively trading. I had a friend that had traded penny stocks and made some money, but my sort of more outside view was that that wasn't a really strong decade. But of course, the 1990s were really strong, leading to the dot-com bubble. But then that bubble burst, and we ended up going through a period which was nearly 18 years, 20 years of relatively slower markets. Now, things did pick up in the market when cryptocurrency started to take off, when Bitcoin started to really gain some steam. So 2016, 2017 was strong. And then, if you followed Bitcoin, back in those years, we had this huge rally in Bitcoin, and then it dropped. And we had this like Bitcoin winter. And the thing with Bitcoin is that it's a speculative asset. And of course, day trading is speculative as well. But I think when crypto is strong, the interest in speculative markets across the board is stronger. More people are hearing about, oh my gosh, another Bitcoin millionaire, whatever. And I think people are like, I got to get into this market. And some people in that sort of pursuit end up, stumbling into day trading stocks instead of crypto, which they might feel is maybe better. They feel more comfortable with the brokers or whatever the case is. I mean, that's been my feeling, but whatever. So it seems like these waves in the crypto market sort of parallel the waves that are in the small cap market and even just the total volume in the market across the board. So then we had another big wave with the pandemic, right? We had this big wave, crypto, stocks, GameStop, 2021, and then interest rates hiked. And guess what also happened? FTX collapses, Bitcoin, everything drops, right? So 2023, 2024 were slower years. But then 2024, so I think in this sort of anticipation of a new change in political leadership here in the United States, with the new administration being more favored for crypto investors, all of a sudden we saw this rally in crypto, and now we're on this like next leg up, which at this point, I mean, I don't know. I mean, we always are wondering how long will it last? Will tariffs change it? But given the sort of relationship between the crypto markets and small cap markets, I just don't know. I mean, it could be that it's relatively strong for the rest of this presidency for 3 more years. I could be wrong. I don't know. And it's anyone's guess, but that's kind of something that I'm noticing. So all of that was to say that I learned to trade during a period when the market was a lot colder. And so what that meant was that there was less volume in the market. Of course, 15 years ago, you still had to pay commissions. So people traded less because every trade cost them $5 to $10. So there was way less volume, less liquidity. It wasn't as easy to get in. It wasn't as easy to get out. You had to be more patient. And when you had profit, you better pay yourself. You had to take it off the table because just like that, it could disappear. So traders that learned, I think, during the 2000s, anyway, really, traders who learned prior to the pandemic are kind of, I think, a little bit of a different mentality of trader, because we learned during a period where there was a lot more hardships. It was very challenging. You had a lot of cards stacked against you, commissions, platform fees, internet speeds not as quick, mobile apps being terrible, and if you were able to make it during that period, that's pretty impressive. And then you've got these traders that started during the pandemic that began during a period when stocks going up 100% is like a regular occurrence every day. And so, I think for me, each day when I sit down, on the one hand, I am kind of like eternally optimistic, but definitely in a cold market, I know how to just take my base hits and lock up base hits. And I'm really good at doing that. But when the market heats up, I try, and it's against my nature because of the way I learned to trade, but I try to be more aggressive about continuing to add to positions, even if they're at really high prices, and trying to hold a little bit longer. As you can see from my profits over the last month, that strategy has been paying off really well. I crossed over $1 million, not on the year, but on the month of June, just on Wednesday. As of today, I'm at over 1.1 million on the month. Wow. And we've still got a full week to go. So, I'm just, I'll remind you as always that trading is risky. Volatile markets like this can be tricky because you get on the wrong side of a big move and you could be in the red quickly. So as always, you should practice in a simulator before putting real money on the line. You should still focus on trying to lock up those base hits and build a track record of consistency. But what you're going to see from me, as long as the market is hot like this, is me taking more risk and at times sacrificing a small base hit for the potential that we're going to get another stock that goes up $10 a share. And that's where I'm going to be stepping up, adding to the position, and riding that wave and trying to participate in that momentum as much as possible. Because I also remember what it's like to go through, the crypto winter where everything is dead and it can last, a year. And you're just like, the reality is I have made more in the last week than I made in all of 2023. All of 2023, I made less than $500,000. That's 12 months of showing up every single day, 250 trading days, made less than $500,000. Now, don't feel sorry for me. I'd already made 10 million trading. It wasn't but that whole year only added an additional 5% to my total profit that I've ever made trading. It was kind of crazy. And I was asking myself, am I ever going to get, my groove back? What's going on? Is this me? Did I chicken out? Am I too afraid to step up to the plate? But every time I would step up, I felt like I got slammed back down. Well, now, at that time, we had a headwind. And now we've got a tailwind. And all of a sudden, you start seeing these stocks moving, bigger and bigger and bigger moves. You start taking more risk. And I think anyone else would, especially if you had a nice track record that was backing up your strategy. So that's where I'm at here. At the end of the week, I am super excited going into next week, and being on a traveling trading station isn't going to change things. I'll be showing up, I'll be trading, and running the broadcast as usual. And so hopefully we'll have some really good action at the beginning of the week. Mondays and Tuesdays have been strong, but really it's been strong pretty much every day. So I'm going to show up, do the best I can, and I hope to see you guys over in the chat room at Warrior Trading. I love having you guys tune in here on YouTube. I hope you hit the thumbs up and or subscribe to the channel. I do have some more episodes that are going to be coming, another one that's going to come over the weekend. But hey, if you want to do a 2-week trial at Warrior Trading, it's $20. You can trade with me for the rest of the month of June, see how June finishes up, and that'll also carry you, I guess it won't be quite into July. Let's see. Let's look at the calendar. So we've got, no, it will. It'll carry you through July 4th. What am I talking about? So yeah, 2 weeks. So that would be all next week and all the week after if you do a 2-week trial. So that would be fun. All right. So anyways, consider it, check it out if you'd like. And I'll remind you guys as always, trading's risky. So take it slow, practice in a simulator, and I'll see you guys back at it bright and early Monday morning. All right. I'll see you then.